Okay, folks, won't be long. Just getting set up. Maybe someone can say hi, just so I know that we're coming through. We appreciate it. Get yourselves a coffee or whatever, and I'll see you soon. Thanks, chaps. Looks as though we're coming through okay. Okay, good afternoon, folks. Good afternoon. Where's the cameras over there? Good afternoon, folks. How you doing? Hopefully you're doing well. Hopefully you had a good weekend. Gosh, if you're in England, you are enjoying, what do they call this? An Asian summer or something? It's 29 degrees in here today. So it's pretty hot, but maybe it's the last few days of our beautiful weather. Certainly is nice out there. So looking forward to getting out there and enjoying a few cold ones later. Right, good to see you all in the room. Let's have a look here who we got today. So we've got Tim from South Africa. We've got Bal Catalin, so you all know it's live. You say hi, I say hi back. Well, to most of you. From Morocco in Africa. Yeah, good to see you. Fruit Challenge. Kevin Moody's in Missouri, USA. What time is it there? Oh, it's not too bad. What's that? 10 o'clock there? 9 o'clock there? Forex student outside Glasgow, a little town called Coatbridge. Sounds lovely. And Kenya. I'm beaming all over the world today.
ECB's lane saying there's no indication that we're hitting the lower bound.
Okay, so right, just a little run through of what we're going to be doing here. We do this each and every week now. I'm going to come on at this time. I know a lot of you have been following me over the years on the channel, so I thought it was about time to give a little bit back and give you guys a chance to sort of interact with me on a real-time basis, rather than sending me emails, which is great, and messages, comments, and what have you. We should be trying to get back to all of them, but this gives you a chance to maybe interact with me in real time. So thanks for tuning in. We're going to do this every week. It's going to take the same type of format. I'm just going to run through basically what the market drivers are this week, what they were last week, what was moving markets, financial markets, in particular the Forex market. Then we'll talk about what you should be looking out for this week if you're trading, if you're actively trading. And then we're going to have a bit of about a 10-minute every week, 10-minute sort of educational section where I'm just going to go over a topic that you guys have requested. So if you want me to cover a topic next week, the following week, let me know as well. We do have an admin team here down taking notes on what you guys request, and I will try and cover it. It's like a short 10-minute education section, and then we're going to jump onto the charts and see if we can make a few pips on the lower time frame charts. Now I'm not an active trader on the 5-minute chart these days, purely because I'm just too busy, but we do try and but we will draw down and see if we can do something just for the sake of this sort of like Monday stream. We'll be doing this on the 5 and the 15-minute chart. I'm not going to go through the rules of the strategy each and every week, but they do follow the rules of the strategy that I spoke about last week, so you can always watch that back. It basically follows just trend continuation, pullbacks, looking at certain price patterns. I'll explain it as we go along when we get onto the charts in a minute, so I'm not going to it won't be completely alien to you. Now I did release a video last week. I believe we released a video. I know I have my admin team listening in. Kim, maybe you can drop last week's video in there. It's quite a long video. It was I think it worked out to be 48 minutes. I was told to keep it to 25 to basically explain everything that I know about the Forex market in 25 minutes. It was a bit of a hard challenge, that. Got it out in about 48 minutes. It's basically almost like a crash course in Forex. If you've never traded Forex before, can I suggest you go and watch this video? It basically gives you a bit of a clue into what this market is all about, and then of course you can make an informed decision whether this is something you want to take forward. But if you subscribe to the channel, of course, you can you'll see it in there. But maybe we'll drop it in the link in the chat in a minute if she's listening in. There we go, she's dropped it in. Save this for you later, guys. Yeah, watch this after this stream. You can watch this after. It's a great sort of concise, if you like, view of the Forex market, and then you can decide what you want to do. Right, let's get straight into it, because I am limited to about 45 minutes on this, so I don't want to waste any more of your time. So basically, last week, the biggest drivers last week in the Forex market were basically ECB. ECB stands for the European Central Bank. Like every central bank, they meet once a month, I should say. Once a month. Just move my microphone there. They meet once a month, and they basically decide on interest rate policy. Remember, as Forex traders, foreign exchange, we're always looking at what the central banks are doing to interest rates. And the theory is, as Forex traders, where interest rates go, so should the currency. So if the interest rates are edging higher in a particular economy, then that normally would be supportive of that particular currency. So if the interest rates are heading up in Eurozone, for example, then you expect the Euro to perform better than other countries. Now, this day and age, certainly since COVID, pretty much every central bank out there have just basically been flooding the market with money, flooding the market with stimulus, and dropping interest rates to pretty low levels. So it's almost like a race to the bottom. Who's going to get down there lower? Anyway, ECB left their rates unchanged last, was it Wednesday or Thursday? I think it was Wednesday. It was Thursday. So ECB left their rates unchanged. Although Lagarde, who is the president of the ECB, she was quite upbeat about the economy going forward, which I thought it basically caught me off guard, actually. I thought she would be less upbeat. Certainly when you look at the spread of COVID in Italy and France and Spain and so forth, but she was reasonably upbeat, and the euro currency actually quite liked it. The euro pushed on a decent bid towards the end of last week. We'll look at that on the charts when we get onto it later. But the big show that was in town last week was the euro strength, but also the pound weakness. Pound was under big pressure last week. Pound was under pressure. That's the UK currency, was under pressure basically because of Brexit. You may have heard of Brexit. It doesn't get mentioned often these days, Brexit, with all COVID, but Brexit basically had they were basically all meeting up and trying to come up with some agreement, it wasn't looking very favourable. And also there's a possible challenge to the UK government in a legal challenge as well, which is weighing heavily on the pound. So pound basically took a real dive. Certainly against the dollar, it dropped to almost 500 pips against the dollar. And this week it hasn't. Well, this week, to be honest, Monday morning, we've seen a bit of strength coming into the pound. For me, I'm still selling pound on any bounce that you might see at the moment. I still think there's many headwinds ahead for the UK. So we have just taken a long trade in the euro against the pound, buying the euro and selling the pound. I've literally just done that at about 15 minutes ago. You'll see it on my ticker there below. I'm long the euro pound at around 92.10. I don't know where it is at the moment. Let's have a look. It's about there, it's on my screen. But that's basically where we are at the moment. And also to note, the stocks wobbled. The markets, stock market has been in bullish mood for the last pretty much since Trump got elected, but even since COVID, when stocks dropped 30% or so, 35%. Since I think it was about the 21st of March, stocks have been on the tear to the upside. And NASDAQ, which is the sort of the tech stocks, you've got the S&P 500, the top 500, they all had reached all-time highs that we hadn't seen since even before COVID. Obviously the big drop, but now we're pushing those highs again, despite a global pandemic. Bonkers, I know, I hear you cry, but that's the way it is. Stocks are hitting all-time highs, but last week they all wobbled. The S&P 500 wobbled, the NASDAQ wobbled, the UK market wobbled, the French market, the DAX wobbled, the Japanese markets wobbled. So the stocks took on a bit of a wobble last week, which was a bit like a risk off. I got risk on the thing, but basically we had a bit of a wobble last week. We've sort of moved into risk on tone, maybe. In fact, I'll put that risk tone back on. We are on risk tone on at the moment. When I talk about risk, people often ask me, what do I mean by risk on, risk off? If you want to take on more risk, you invest in the stock market. If you don't want to take on any risk, you take your money and put it under your pillow. That's taking on no risk. That's risk off. If markets are going up, that means risk is taken on. And when you say risk on, it does have implications to various currencies. More about that if you come over to the room. We'll talk about that in more detail. Hello, Jeff from Tanzania, and hi, Brian, to you as well. Top of the morning, says Jason. I think I said that already. Right, this week, a lot of bank decisions this week. Okay, so first of all, we got US retail sales later this week. The reason why we look at retail sales, clearly, if retail sales are up, the economy is buoyant, and everyone's spending money, that has a push on prices. Inflation's edging up. Central banks need to move interest rates to combat inflation. Now, anyone that follows the US politics would know that last week Powell, who's the Fed chairman, did mention the fact that he's quite happy to let inflation move above the normal target of 2%, but they're going to look on an average basis. So that basically means that they're going to be keeping interest rates low for longer. So retail sales numbers out this week, bit of a clue to what's happening to prices. We'll keep an eye on that. Then you've got the FOMC, Federal Open Market Committee. That's where the Fed decided on interest rates. It's unlikely that they will be moving interest rates, but as with all the central banks at the moment, it's more really about the stimulus, i.e. money that they will put into the economy and their forward outlook. I don't know if this one's that important, having had Powell being very vocal at Jackson Hole last week, but anyway, we will be watching it. That's on Wednesday, 7 p.m. London time, which is 2 p.m. New York time. We've got Aussie Unemployment out as well, looking for Aussie currency seems to be doing quite well recently. The employment numbers don't seem to be as badly as affected as other parts of the world. So Aussie employment will be interesting. That will have an implication on the Australian currency. Then you've got Japanese policy. That's when they decide on interest rates. Well, they're not going to move interest rates either, but it's all to do with what they will see going forward in terms of their economic outlook and projections. And then, of course, we've got the UK MPC on Thursday as well. That's when the UK decide on interest rates. Again, unlikely that we'll be moving interest rates, but more sort of interesting that we will be looking at to see where the outlook is. There's an outside chance this week that we will see interest rates go into negative territory. I don't think it's going to happen, but UK is certainly going to look at it. We'll be looking at it, and if you bear in mind all this Brexit uncertainty, it does certainly could be a possibility. Right, that's basically what to look for. Just have a quick look at the charts, so I'll show you exactly what is going on at the moment. Let me just move this to the current day. So this is what's happening at the moment. This is an MT4 chart. You can download this from any broker. We're looking at this momentum meter here. This is showing me what the currency markets is doing right this moment. This white line is the British pound. As I said to you last week, the pound, going back to the daily chart, was in big trouble. This is the pound all last week, was one of the weakest currencies, was the weakest currency. Today, this little kick up at the end of this shows you that the pound is gathering a little bit of strength. The other currencies, the Canadian dollar is moving back a little bit. You can see here on the lower time frame chart, the Canadian dollar, the US dollar, and the Australian dollar are all edging down a little bit at the moment. So we're looking at that. What I like about my trade I've just taken, so that you can, if you took the trade last week, by the way, when we came online, we sold pound against the US dollar. We took 300 pips out of that. I'm not sure if you were in that trade, but it was a nice setup we had. This time now we've just taken a potential buy trade, okay, in the pound against the euro against the pound, okay, and I am long here. My stop, just for those that are following, the stop is where you get out of the losing position. If this moves 100 pips against me, my stop is basically down there at 91.10. Okay, so I'm looking for a trend continuation higher, and my profit targets will be up there at 93.50. This is one of my trades for the week. This is 180 pip gain, 170 pip profit target with about 100 pip stop. It's a decent risk reward. We've had a nice pullback into support. The trend is clearly your friend on this currency pair. They're nicely fanned out moving averages. I've been told not to cover my screens with my face, so I'm going to put my face over there. And it's a nice little pullback. It's a 50% pullback from this range. Is one of the trend continuation rules that we like. So we're basically still, we just entered that now. Literally at this entry level now, should you wish to. And Marco says, nice trade on the pound dollar. Thank you, Marco. Yes, it was, Marcos. It was indeed. Nevada. Hello, Kevin Lee from Nevada. I think we've spoken before, haven't we? Ticket yen is weak. Is that right? The yen is... Well, it's weak on the higher time frame charts. Yes, it is. But let's have a look. It was weak. I did sort of... let's have a look at this. So I got the yen down here. Look, if you tell me, here's the yen, it's most probably mixed. I'll give you that one. I will move the yen to mixed. Yeah, bit of risk off coming in today. I'm just going to move that to mixed for you. So yeah, move the ticket to mixed on the Japanese yen. But yeah, you're right. Maybe it's not so weak now. Right. Okay. I want to talk to you today. Okay. The other position we've got going at the moment, you'll see, we're short the CAD against the Swiss dollar. I quite like the CAD Swiss to the downside. It's one of my trade signals from last week, which we put out in the trading room. I know a lot of our members are on this trade as well. Okay, so this trade was a short trade we took at 69.25. It's been stepping down nicely. We took this because of one of our strategies that we teach inside the room called the naked trading strategy. We saw this bit of price action at this pullback, this bit of price action up here on the daily. Gave us an entry. If you want to learn the rules of this strategy, do just come over to the trading room, and I'll and you can follow the modules on this trading strategy. But we took a short trade. It's doing all right. We're about 50 pips up at the moment on this trade. We've got our first profit target in there, another 35 pips to go. I do like this on the lower time frame charts. Okay, we've had a couple of pullbacks, and both of these pullbacks you've seen on the 4-hour chart have given us re-entries. So you've got a nice bearish engulfing pattern there, pulling back into the moving averages, and then the market moves back down in the direction of our trend. Then we have another pullback with this bearish engulfer coming in again. We've taken in a lower high than the previous high. So, although I'm in this trade, I'm still pretty liking it. So I'm quite happy, quite confident with this trade at the moment. Lower highs as we go down. This has got every potential to hit our first profit target down there. and then of course we'll move to break even. But all the rules of that strategy are in the trading room here at Forex Signals if you want to come over and learn more about it. Thank you, Marco, another fan of ours. There we go, just having a quick look at the chat. Right, today I want to talk to you a little bit about one of the most common forms of technical analysis out there, and that is basically support and resistance. Okay, I want to talk a little bit about support and resistance because it really is, I get lots of questions from traders of all levels of experience over the years, how to draw support and resistance. And really, there's lots of information out there, but I think that most of the information you get out there just overcomplicates it. When people generally ask, it means they want it less complicated. So I want to show you today basically how I draw support and resistance, and why it is so important. Now, for those of you that don't know what support and resistance is, here's the basic definition. It's basically horizontal lines on a chart that represent turning points. It's a shift in control. So with any market, when you are seeing, let me just pull up my drawing tool here for one moment. Let's have a look here. There's my drawing tool. So with any market, if a market is trading in any particular direction, it just basically means there are more buyers than sellers representing an uptrend. More buyers than sellers means the market's going up. If the markets are going down, it basically means there's more sellers than buyers. So whatever moves the market is basically the mass outcome of the buyers versus the sellers. But at some point, let me just, I like to draw this on sort of like, you see this like the seesaw, yeah? So you've got the buyers taking the market higher, yeah? That would basically push it up, and the sellers would be taking the market lower. When you see this balance, where it's an equilibrium, where it's a change, a shift in control, where the buyers now have been met by the wave of sellers, or the sellers have been met with a wave of buyers, that basically tells you that the market is going to change direction. That's basically what support and resistance is. And us as technical analysts, us as human beings, we always believe that human nature will repeat itself. Where buyers became sellers and sellers became buyers, this is where people are making money and losing money. When markets retrace back to those levels, these levels will be respected again, time and time again. Now, the higher out you go on the time charts, the more powerful these levels are. But the biggest problem that people have is that they draw way too many lines. Let me just define here to you what an uptrend is, a resistance, I should say. Resistance is where the sellers overpower the buyers that result in the stalling or reversal of an uptrend. Yep, the market's trading up, buyers are in control, and then the sellers come in. That creates the market to stall and potentially roll back down on itself. Yeah, and of course the support would be the reverse of that. So support, this is resistance. So markets are trending up, sellers come in, take control, and that creates a resistance level. So how important is that level? Well, the more times that level has been respected, the more important that level becomes. Now, the resistance level can be a big single turning point, but if it's been respected more than once, like you see on the chart now, then that is potentially quite a big level. So I like to draw support and resistance at the major turning points, the major reversals, highs and lows on the weekly, the monthly, daily, or where levels have been respected twice. If it's been respected 3 times, chances are it's going to be a more powerful level. So resistance is at the tops of trends, and support, of course, will be at the bottom of a downtrend. So support is where buyers now overpower the sellers, resulting in the stalling and the reversal of a downtrend. So the markets are trending down. You see here, trending down nicely. Okay, we get to a level, and now the buyers come back in, push this market higher. That creates a level on the chart that we want to be aware of. If in time this level is tested again, a second time, that's a very powerful level. Very powerful level on the higher time frame charts. Now, people do draw support and resistance on the lower time frame charts, on the 5-minute chart, 15-minute chart. But if you think about the amount of players, the amount of buyers and sellers, the amount of traders that are participating in a on a daily chart, clearly they are much more powerful. I want to show you a very quick and simple way how to draw support and resistance. Okay, as you know, with a candle shows you lots of different information, and shows you the high, the low, the close, and so forth. But the best way I think that you should be drawing support and resistance is ignoring all this noise that you see on a particular chart. Here you've got the candles, highs and the lows. We use the line chart. The line chart takes away all that noise, takes away the highs and the lows. Remember, on a daily chart, the close is a very important level. It shows you who won the balance in that particular trading day. So did the buyers win control? Did the sellers win control? If you take out a chart now, for example, this is the pound against the yen. It's quite clearly now where you can draw these levels that have been respected once or twice, and you draw these in on the daily and the weekly chart. This is the daily chart. Clearly you can have a line up there. Back down here, pretty much where we are now, a line that's been respected there. You've got a V shape here and respected here. This is where old support has become resistance. You may have another line down here. Remember, we're taking away those annoying wicks. Those annoying wicks confuse. You have these on the higher time frame charts. So you do this on the daily. You do this on the weekly as well with a different coloured line. Now I've gone out to the weekly chart. The weekly chart levels, you'll change the colour of your support and resistance, so you know by your own key what this is. So for example, the weekly level, I'd have a weekly level up there. Okay, I'm going to change that colour to something else. That's why I say, if you have a colour coded something, maybe something like that, where you have a daily, the purple, or the weekly might be the brown, or so forth. So when you go back onto the chart, you know exactly what it is. Now I do this on a Sunday evening ahead of where the market, the week ahead. So basically, to do this, once a week, just update your daily and weekly chart, and don't draw too many lines. I've seen some charts before in the past where they've literally had more lines on the chart than you care to think about. These are the big key levels. And I'm going to show you now a little example here on MT4. Okay, I'll tell you what I'm going to do. Someone in the room can basically pick a currency pair. Anyone pick a currency pair now. The first one to pick a currency pair, I'm going to keep an eye on the chat, and I'm going to show you how powerful these are on the daily chart. Waiting for someone to just drop a currency pair in. Euro against the US dollar, says Court Santos. So I'm going to go to the euro against the US dollar. Okay, and let's have a look. Euro against the US dollar. I am going to scroll back in time on the MT4 chart. So what I need to do is go to Properties, take off Auto Scroll, and scroll back. I'm just going to scroll back. Let me just take these lines off for now. Okay, so we're just going to scroll back in time. Okay, so this is now, I'm going back to whatever this is, March 2008. Okay, so I'm going to put in my lines on the daily chart. Definitely one down there. You would agree with that, yeah? Big V there, respected there, almost respected there. I'm going to put in another one there. Remember, I haven't seen this data before. I don't know what's coming up. Yeah, I'm going to put in a line there. If we get down there, I'm going to put in a line down there. I'm certainly going to have a line up here. Now, I'm only doing this on the daily, but you can do this on the weekly as well. Just the key levels. And I am going to put one in there as well with this V-shaped. Yeah, it's respected here on the way down, and that's it. I'm going to go back to the candlestick chart. Yeah, I'm now just going to scroll through using the F12 button to see how these levels that I've just plotted in, just plotted in, are respected. Okay, so here we are. Every time I hit F12, a new daily candle is created. So we bounce off support there, coming up to that resistance line, breaks through that resistance up to the next resistance, and it respects it like a T, pulls off that daily line there I've just pointed out, pulled back 150 pips from the daily. It finally breaks through, coming up to the next line of resistance. I don't know what's going to happen. It holds it, puts in a pin. Okay, you see it held it there for 3 days before it moved up through. It did break up. It did break up eventually, and then it came back down, back to that level of support. Bounced off it, 130 pips. Bounced off it again. Now coming up to the next level of resistance up here. You see it up here at 59. 59. Gosh, was the euro dollar up at 59 at one point? Yeah, it was, wasn't it? Okay, it rolls right off that level of resistance. Puts a pin bar in there. Rolls back again. See how that level's been respected? Back to the level of support. I mean, it's bouncing off these just like, you know, as if I'd seen the data beforehand. I didn't pick this. And breaks through. Let's see if we trade back down again. So we trade back down to 56. Bounces off it. See this candle here? Bounces right off it. That bounced off, or moved off, bounced off another 150 pips. Coming back down to this support zone down here now at 48.75. Bounces off it. Massive bounce off that level to the tune of 200 pips. Finally breaks down through. Breaks down through, comes back and retests. Off it goes again. Yeah. These levels on the daily. If you're struggling with your win-loss ratio, I suggest you just move out to the daily time frame chart, plotting these levels on the daily chart. Look, I didn't know this data was coming. I had quite a big gap between this line here and this line here. Yeah, there's no lines, and look what happened. Finally, when we broke through, there's nothing to stop that until we got down to my next support zone. Okay? And I didn't pick this currency pair, someone else did. But that's basically what I suggest to do. So go out to the daily time frame chart, ignore those wicks, put them on the big levels, and basically look to not trade your trade strategy through those levels of support and resistance. If you're struggling with your win-loss ratio, get these out on the daily, on the weekly, and stick to those. Now, of course, if you're trading on the 5-minute chart, you might want to stick the 4-hour chart there as well. But 4-hour chart, there's a 4-hour chart, a line chart. Okay, I personally prefer the daily, but of course you could use the 4-hour as well. But that's my advice to you. If you're struggling with support and resistance, get out to the high time frame chart, get on the daily, the weekly, get out of those wicks, plot those levels, and just watch how they respect them. Right, let's have a quick look at what's going on. Let's get back to trading, see if we can make a few pips. This is the strategy that we spoke about last week, or a strategy I always talk about here. Let me just pull up my let's just pull up the broadcasting software so I know what you lot are looking at. Hopefully, here we go. Launch anyway. Here we go. Right. Okay. So I am going to. Yeah, I think I can leave my camera down there for now. So this basically is what I'm going to do to see if I can find some trading opportunities. This is trend following, folks. I'm going to be trying to follow the trend by looking at pullbacks. As we know, trends never go in a straight line forever. We always have pullbacks along the way. And I don't know, when we're having a pullback, if the pullback is going to be a pullback or whether it's going to be a trend change, i.e. a reversal. So pullbacks, yeah, this is the downtrend. I'm looking for a certain bit of price action pattern that confirms to me that this indeed was a pullback and not a reversal. Of course, some of them do turn up, those reversals. But for me to have an edge, I'm looking for that type of pattern. These are bullish engulfers, bearish engulfers. I do discuss these in a few of my videos on the YouTube channel, so make sure you go and check them out. I did go through the rules last week. I will go through the rules again another time, but for the sake of today, I'm just going to get in and see if we can make anything. I've got my pattern finding tool. It's going to do all the work for me, so I'm not going to be spending time having to scour through all of them. It's going to switch this on and see if any setups happen. Now, this is on the 15-minute chart, as I say, and the 5-minute chart. But you can, of course, you're going to select to see these on the hourly time frames or the 1 hour. I want to see a trend on the higher time frame chart, and I'll enter on a pullback. So let's have a look here. What we got here? We got the CAD against the Swiss. Oh, I'm short the CAD against the Swiss. What's come up there? I like that. We've got another short potential in there. I'm already short it, so I'm not going to take another trade even on this stream. but I am shorted already, so I don't need to get short again. But you can, folks, okay, if you're taking this trade now, nicely fanned out moving averages. We've pulled back into the array. It's pulled back into previous support, acting as resistance. You put in this bearish pin bar. You can enter a short trade around 68. And don't do this. Just do this on demo for now if you want to test out the strategy. I don't want you to put your life savings into this trade, but I'd be taking a short trade now, and you can have yourself an intraday stop above the 60 moving average plus a couple, so you'd have about 17 pip stop. Take this trade lower. Okay, so you can use this risk management tool. You can basically look to see say a 17 pip stop takes you in above around there. Okay, I want to make sure I get at least a 1-to-1 risk reward ratio. So my profit target is going to be moved down here. You can look here at the risk management tool. I've got 1.2 risk reward ratio. This is trading 0.5%. I'm not going to take this trade, but you would have my blessing if you wanted to take this trade with a stop. That's a nice pullback in a confirmed downtrend. Looking here to the right, so it's must be not a bad trade, the CAD Swiss, if you want to take that one with those levels. So your profit target down there would be around the 68.65 level. 68.55 would be your stop on that one. But interesting one, that. I say, a shame I've already got a short trade. I'm loving it. It's a short trade. I'll stick with that one. Aussie Swiss 15-minute pin bar. Ooh, look at that one. Yep, we don't take that trade, folks. You know why we don't take that trade? Because we need to see the moved out averages fanning out to the downside for short trades. They're not, they're all crisscrossing. We don't take that trade. Ian Goldman, do I use hedging strategy? And I don't use hedging strategy. I spent a long time working in the trading pits. Ian, when I was wrong, I got out of position. I moved on to the next one. I know some people do use hedging on whatever. They've got so many trades on, they don't know what they want to happen. I don't use hedging, but that doesn't mean it doesn't work for others. It doesn't work for me. 10, 20, 40 are the moving averages, but this is an array of moving averages. These are the guppy array of moving averages. So let's have a look here. So I'm not taking that one. We've got about a minute before the next 5-minute candle changes. Let's have a quick look at this one. Got a bearish engulfer again. I can't take this one, although the trend is looking good for the Aussie New Zealand down. Yeah, but you know, I mean, you've got basically an hourly chart there as well. Look at this pullback on the hourly. Hour is my anchor chart. A pin bar pullback into that previous support resistance. Aussie New Zealand probably goes lower from here, but you've got to have your rules of engagement, and unfortunately it doesn't fit into my trading rules here. I might think it's going down. I don't always trade what I think. I've got to have my rules coming into line, my stars aligning if you like, before I take the trade. So I'm going to leave that one. Euro was okay. We just got another. Let's just wait now. I'm just going to see this next 15 seconds to see if any other trades come up. Anything going up? Let's have a look. There we go. No, 5 seconds. 5, 4, 3, 2, 1. Nope, no more setups in the last 5 minutes. That's okay. We'll keep on going through these old ones. Euro was 5-minute pin, bullish pin, downtrend. Not taking that. Yeah, I want to see the moving averages all facing in the higher time frame. No crisscrossing with the trend. Waiting for the pullback on the lower time frame. Very simple. You don't need to overcomplicate this with lots of information. You put this in. I mean, put these in with with those big levels on the daily stock to get that win-loss ratio in your favour. Don't take trades that are trading through those big levels. Remember, in trading, all we're trying to do, folks, is get a slightest edge. The casino roulette wheel. Pays out 36 to 1. It's got 37 numbers on it. That's basically why the casino wins. It's got the slight edge and it keeps doing the same thing. Your trading should be the same. The slightest edge. Boy, you can toss a coin and be right 50% of the time. You get a better edge than the toss of a coin by following the higher time frame trend. Aussie dollar and keeping out of the daily support and resistance. Aussie dollar 5-minute engulfer. That's the reversal pattern. One of my strategies I teach in the room is a reversal trade. We call it the naked trading. It's basically when we see big turning points on the daily time frame. I only take them normally on the naked strategy, we've called it. Basically, it's get rid of him. But it's basically it's a reversal pattern. We see them on the daily. Did you catch the signal he called? Essan, I called the CAD Swiss. Yep, with about a 20 pip stop, slightly better risk reward. Yep. We've got another 3 minutes before the next candle trades. I'm not going to trade for the sake of it, folks. I'm not coming onto this YouTube channel doing live and just trading for the sake of it. I'll only trade. When my signal, when my rules align. No stop loss, 10 lots. Thanks, bro. Good strategy. No stop loss, 10 lots. We go for it. Yeah. Mark goes in from the naked strategy. I don't trade up. That's right, Mark. I don't trade off the moving averages. I just trade them for the direction of the trend and so forth. Sadly, does not work with my currency. It does work with your currency, Zach. It should do. If it doesn't, I'll have to have a word with the coder. Zach, maybe talk to me afterwards. If you're a member of the room, come and talk to me. It should work with the... if you're not trading with that risk management tool, I mean, look, if you follow us, come over to us, you can access all these tools that I've shown you, the pattern finder, the momentum meter shows you what's strong, what's weak, and of course the risk management tool. I will say this, folks, if you're not using one of these, whether it's one of ours or not, if you're not using one of these, chances are you're going to struggle, and to make consistent gains in the market. If you're not considering risk on each and every trade, then you're doing something wrong. Einstein, once said, well, I don't know if he said it, but I heard he said it. He said a lot of things, didn't he, Einstein? Most of the things, spent a lot of time saying things. Einstein once said, compound interest is the eighth wonder of the world. Those that understand it earn it, and those that don't, they pay it. There you go. Same percentage risk on each and every trade. We all go through drawdown periods. We all go through losing periods. If you're controlling risk on each and every trade, as you go through your drawdown period, your dollar amount lost is less. And as you go through periods of gains, and we all have these flows of string of winners, strings and losers. If you're doing that percentage risk on each trade, then it gives you half a chance of making some money out of this. Anyway, you can come over to the room if you want to. If you want to try these tools out, it's free to. There you go. Check out the risk management tool there. Kim's just put that in for me today. You can check out the risk management tool. Thanks for that. Mark Burton's on the golf course. You've got a fair way to go. The old ones are the best, Mark. Right, here we go. Couple of seconds. Let's just go back to the chart to see if we've got anything. We've got a couple of signals being thrown up there. We had the euro pound. Oh, I've just gone long euro pound. What's that going to show me? It's going to show a downtrend, I should think. Yep. Euro pound, 5 minute down. Well, unfortunately, the moving averages are all crisscrossing. We're not taking it, unfortunately. So that one we don't take. I'm short it anyway. I'm long it anyway. So that's okay. But this is a 5 minute chart, a whole different strategy. Pound New Zealand pin bar. Again, bullish pin, bottom of the trend. We ain't taking that one. There's a YouTube video out there on this strategy. I think out there as well. If you subscribe to the channel, I think we've got 240,000 followers. If you subscribe to the channel, you get all my education in one place, and it's all free. And you can talk to me every Monday if you want to. If you have any questions on it as well, I don't know how anyone else offers that. You actually get a chance to talk to me. Can I get these tools inside the trading room? Yes, you can. Maybe Kim, maybe you can give a link to the trading room if people want to sign up for the trading room, or maybe that is the link. I don't know. But you can do that as well. So there you are. I'm risking 0.5% on the account. I can change this to whatever I want to risk. I can change it to just $15 per pip per trade, or I can change that to 0.1 lot. but I like to, as I say, to use the percentage difference. For me, it works better. You can visit the team there. I think Kim's just dropped in a little chat for me. There you are. Yeah. Sebastian, yeah, I'm long the euro pound at the moment. But what I like about the euro pound is the pullback that you've seen. The pullback that you've seen in the euro pound is a result of the pound gaining strength. Yeah. So when you look at my momentum meter, you've got strong currencies against weak currencies. That would be a strong currency. That would be a weak currency. When one of these currencies pulls back, for example, here at the moment, you're having the pound. Or it's the other way around actually. The pound is getting stronger today, yeah, but the euro is still strong, yeah. That shows you that the pullback could indeed be a pullback. If they're both coming down and reversing, that pullback may be more of a reversal. So it's another way to read the momentum meter. But there's plenty of ways you can play with the momentum meter. It really is, I think, one of the. I don't know how anyone trades the Forex market without it, quite frankly. I had it coded for me a long time ago, 2006, 2007, when coders were really expensive. Some guy in Russia coded it for me. It cost me a fortune at the time. Yeah, but you can come and use it for free. So you... Yes, correct, Tito. You put in the percentage risk, 0.5. I can also have a pending order. Okay, so turn on the risk management tool, pending order, which is basically, so I could have a pending order down here, the yellow line to buy. If it gets back down, my stop would be, say, down here. I'm just going to show you how it works. And my profit target's up there. So this works out my risk reward, good risk reward on there, 4.2 to 1. That's not going to happen too often. There's the dollar amount risk, 0.5% of the account, place pending buy, and the market is sent that order. This is a real account, so I'm going to take that out because I haven't got a view on that. But I can also have double profit targets as well. Okay, so if I want to have 2 profit targets, green lines up here, I can have multiple profit targets as well, and of course stops below. But you've got to be using one of these. It enters the trade in 2 parts, 0.41 of a lot on each of them. No, it's not on MT4 generally. You have to. It's ours. You just have to download it. You need to download it, and you can get it from our trading room, of course. So you can try it. Come in and try it for free. And if you do come over, by the way, from the YouTube channel today, just let me know. I'll be there all afternoon today, and all this week, and next week, and the week after. If you do come over to the room, come and say hi and say you've joined in from the live stream, so that I know these are, so I can roll out the red carpet for you. So there you are. I'm going to wait for the next 20 seconds. We'll see what's happening. If there's a setup, all well and good. If there's not, then I'll be seeing you next week if you don't come and join me in the room. I'll just get rid of some of these. So we just wait now for the next 10 seconds. See if there are any setups. Here we go. 5, 4, 3, 2, 1. Oh, we got a few. I'm just gonna. We got quite a few 15-minute ones. Yep, the 15 minutes have just kicked in. Let's have a look at the 15-minute Euro Swiss. See if there's a setup there. Definitely not. Will you trade that as a trend? Ain't trending anywhere. Not that one. So take that one off. What about the pound CAD? 15-minute pin. It's a bearish pin against the trend. We're not taking that. Remember, you don't want to be in a trade just for the sake of it. You only take them when they confirm. If they don't confirm with your strategy, you don't take the trade. Yeah. Let's have a look. We've got a bullish pin. No trend. I mean, I can go out to the high time frame chart, but I can tell by looking at the 15 minute that there's no trend there. Oh, that's interesting, Annabelle. Thanks. Annabelle, maybe you can come and say hello to me in the trading room inside the Forex Signals chat. Just say hello to me. I beg your pardon. No, sorry, I beg your Tito. Sorry, Tito. If you can come and say hello to me about that, that'd be great. Pound yen must be goes higher today, but I'm not a big buyer of the pound. This is a bullish pin in a downtrend. We're not taking that one either. And lastly, for this live event today, Aussie yen, bullish pin, downtrend, not taking it. Yeah, keeps you out of trades as well. You only take them when they happen. And that means you only take 2 or 3 trades a day. You only take 2 or 3 trades a day. So there you are. Right, folks. Thanks for tuning in today. Hopefully you did learn something from that support and resistance. I encourage you to go and do that. Do that little test yourself. Use the F12 key on MT4. Don't use forward bias. Go back in time. Put on some support and resistance lines on the daily, and just see how they respect. More than twice, drop in a line. Big V's, big W's, big W's or reverse doubles. What do you call a reverse double? A or something. Then big levels. Stick them in. Don't flood your charts with support and resistance just on the higher time frame. Look, thanks for tuning in. Hopefully I'll see you next week, same time, same place. If you want me to cover anything in particular on the 10-minute sort of 10-minute education, drop it in there as well. In the meantime, if you do come over to us and join us at Forex Signals, come and say hello and let me know so I can, as I say, give you the special treatment and roll out the red carpet. Look forward to seeing you in there. If I don't see you in the trading room, have a good week, and I'll see you next week on this channel. So thank you for tuning in. If you're in the UK, enjoy the rest of the day. It looks like lovely weather out there.